1,000 units. That means the movement value is 0.0001. So if you have $100 account and you take a trade using this lot size and you do 10 pips in the market, what you're going to get is $1 at what? Profit. Sorry, yes, $1 as a profit. If you're using 0.01, if you go for 10 pips, you get $1. If you're going for 0.10, it means $1 per pip. This is 10 cents per pip. This is $1 per pip, and this is $10 per pip. So if you are taking a standard lot, you're telling me that for every pip you move, you're making $10. Or if it goes against you, you're losing $10. The same thing with 0.01. If I'm going one pip in my favor, I'm making $1. If I'm going one pip against me, I'm losing $1. That's just what this lot sizes mean and the leverage. That's exactly what it means. I explained that yesterday. Now, I explained what leverage means. With your $100, if you decide, if without your broker, you can't make money if you have maybe minimum of 100, 500, 1,000 or any amount. But your broker gives you a leverage. For those who have opened the account with Handtech, you will see where you have your leverage of 1:100, 1:200, 1:300, and all that. That gives you the capacity to make more money in the Forex markets. Normally, with your $100, you can make, the little you can make is maybe in cents. But for that leverage that your broker is giving you, you can actually open multiple trades and make more money. Just like I explained yesterday, you go to the bank to get a loan. Yes, you have, just like, okay, let me give an example for bankers. You know, there's a certain level you get in the bank. They'll tell you this is the amount of loan you can actually get because of your level. So if you decide to go below the amount you want to loan, the company, your bank tells you, okay, I'm going to give you 10 million naira, but I won't give you in cash. What I'm going to give you is 5 million. But the project you are doing, the more you are doing it, you can have access to that 10 million. If I see what you are doing, I can now allow you to get access to the 10 million. So the leverage is just for you to have more money, for you to have a $200 account. To your broker, you're already having $2,000. You don't see it, but you can have access to that amount when you're trading it. And that's the same way you can as well lose if you're not trading the right way. You're probably wondering how small investors like yourself can trade such large amounts of money. Think of your broker as a bank who basically fronts you $100,000 to buy currency. All the banks ask from you is that you give it $1,000 as a good faith deposit, which it will hold for you, but necessarily not keep. Sounds good to be true. This is how Forex trading usually works. That's just the same thing. You know, when the banks tell you deposit XYZ amount, you can have access to borrow 10 million. That is just exactly what your leverage is. So even if it's your $100, you have access to trade up to $1,000 and get more money in the Forex market. That's just the essence of the leverage. Now, we explained this yesterday, how to understand your MetaTrader 4. Your MetaTrader 4, the balance is how much you actually have, the amount of money you actually have when you have no open position. If I close this $22, my balance will be $10,022. That's why I said when you have no open position, that's the money you have. The number changes based on your winning and your losses. That's simply what your balance means. Now, your equity, the number contains your balance amount plus your profit or losses. If you are up $22, it will show you here. This number moves when the trades are open, equity balance plus floating profit and loss. So if you have open positions here, profit and loss, it will show you the total of how much you have up here where you have the trade. That is what gives you the total of your equity and the profit you've made or your losses you've made. It gives you here. If you're in a minus here, you will see that it's going to be minus $10,000. That's what it's going to show you on your equity. Now, the free margin, the number represents the available money you have in your account to trade with and open new positions. Free margin is equals to equity minus margin. With no open positions, equity, free margin, and balance should all be the same. So now this person has a $10,000 here. He can trade another, he still have $9,872 to trade with, plus this. So if he opens many positions that takes away all this money, He can't just, when this is zero, he can't, this person won't be able to take or open any trades again on his MT4. Now, margin percent, this is the ratio between equity and margin. When your margin level reaches 100%, you may not take on any new positions. That's they tell you, you always look at this figure. By the time it gets to 100 and is reducing, your broker will start closing your trades automatic. So you need to be careful the number of positions you open. Number of positions you open. The more positions you open is reducing your margin and your free margin and the margin percentage. That's what that means. Margin level percentage, stop out level. Once the margin level falls below 100%, your broker may begin to start closing out trade, starting with your biggest position first. So if you have a loss, let's say you have a loss of $100 and you have a loss of $2. If this place gets to zero or below 100%, your broker will not close that $2. Your broker will close the $100. So you need to be careful when you're opening too many positions and you are not making profit, you are in losses. That's what your broker does. They start closing out the big ones first. So if you have a $500 loss, you have $300 loss, you have $20 loss, they will leave the $20 loss, the $200, and they will close the $500. So it can give you small space for you to have more margin percent. So you have to be careful when opening. That is a mobile view. Now this is a laptop view. For those using your laptop to trade, you can see it here, the balance, you can see the margin, the equity, the free margin. This is the way it appears when you are using your laptop to actually trade. Now, types of order. We did this yesterday. Market execution and instant execution. I told you the difference between going to ShopRite to buy something and going to Alaba Market to buy something. If you go to Alaba Market, you can negotiate. If you're selling your mobile phone there for 100,000, you can tell them, I want to pay 95,000. Okay, you pay your 95. Somebody else can go to that place and pay 96. Somebody else can go to that place and pay 105,000. It depends on your negotiation skill. But when you have a buy limit order, a buy stop order, a sell stop order, a sell limit order, it's just like going to ShopRite to buy or going to Goodies to buy anything. If there's a price tag on that product, that is what you're going to pay. So if I tell everyone buy Euro USD, instant execution, the amount you are going to click, the price you are going to get will be different from the price every other person is going to get because of fast fingers. But if I put a buy limit order, everybody is going to, the account to be, the price is going to activate everybody at the same time. If the price I gave you is 1.14086, everybody price is going to be 1.14086 if that account is triggered. That's how it is. Now you can look at the explanation. You place a pending order below the current market price. If the price is at 1.14086, a buy limit will be any price below the current market price. Now let me use a scale of 1 to what? 1 to 10. If current market price is at 5, if you want to place a buy limit, your buy limit should be anything below 5. You're expecting price to come down, activate you, and start going up. Just like I told you, for those who bought iPhone 11 Pro, when it first came out, it was about 500,000. Some people were like, no, I don't want to buy it now because I don't have the money. I need to wait when the price has gone down. iPhone will always bring up new thing. When it comes down to about 300,000 or 200,000, I will buy it. That's the same thing with the market. If you see that the value of euro is going up, you can predict that this value is going to come down. So I wait for it to come down, activate me, then it can increase and start going back up. That's the difference between buy limit and instant execution. But buy stop is you are placing the order above the current market price. That means if the current market price is at 5, you are expecting that price is going to go up further than that. Instead of putting it below 5 for it to come down and activate it like a buy limit, your buy stop order, you're going to put your pending order above 5. Maybe anything above 5, 6, 7. You're expecting price to hit you and keep going up without coming down. That is buy stop. You see the difference? One, you place your limit order, your pending order below, and the other, you place it above the current market price. It's the same thing with the sell limits. You know, remember what I told you about sell? I'm expecting price to do what? The value. So if I'm doing a sell limit order, I'm expecting price to go up a bit, activate me before coming down. If I'm doing a sell stop order, I'm expecting price to just keep crashing down like that, activate me. Maybe if my price is at from 10 to 1, Price is at 7. I'll place my sell stop at 5. Price will come down to 6, come down to 5, activate me, and go down up to 1. That's the difference between a sell stop and a sell limit order. Sorry, I'm very fast. We've done that before yesterday. I'm just doing a recap. Now, this is buy stop and a buy limit. The buy stop order placed above the price, like I explained. This is where price is this green line, and this is you here. You place your price here, expecting price to activate you here and keep going up. For your sell stop, you are the blue circle here, and this is the current market price. You expect price to hit this, activate you, and keep going down. Buy limit is, this is the current market price here. This is you. You're expecting price to do what? Come down here, activate you, and go up. The same thing with sell limit. This is you here. You're expecting price to come back up, activate you, and do what? Come down. That's just the difference between the buy stop order and the limit order. It's just as simple as that. Now, this is the buy stop. This is sorry, my chat is blinking. No, this is not the broker that set the order. You set the order. Don't worry, we're going to do that. We're going to do a live, we'll download it here and I will show you how to set order. Now, buy stop, you can see the buy stop. Buy stop entered ahead of time to enter a long breakout occurs. Now, this is it. This is price here. You can see price here. This is your buy stop order, the blue line. Price is the green line. You are the one that activated it here. This is you here, expecting price to do what? Come up, activate your blue line and keep going up. The red line here should be your stop loss. You're expecting price to just keep going up and up and up. That's what that buy stop order means. Buy limit order, this is a chart. This is a live chart. This is this dotted line here. This dashed line is where price is currently at this red line. You can see this red line here. So your limit order is this dotted line here. You're expecting price, this red line, to come here, activate your order and do what? Go up. That is what a buy limit. But for a buy stop, your order is supposed to be up above this current price. But limit order is below it. So this is just what the difference between, this is a live, and the same thing with the sell stop order. This is you expecting price. This is the current market price. This is your own sell stop order. Price will do what? Activate it and keep coming what? Downward movement. Now, this is a live, how market is. This is a live, live market. This is a limit order, sell entry, and stop. You're expecting it to go up here, activate you, and start coming backwards, downwards. That's just the difference between the sell stop and the sell entry. Now, this is a live, this is a mobile. This is how MetaTrader 4 looks on your mobile phone. Okay, we're going to do that. I'll show you that later. Stop loss and take profit. Like I said yesterday, if you ever forget to put your take profit, never forget to put your stop loss. You see this man? Without this thing holding his leg, he's going to crash to the ground. That thing is his safety net. He was maybe this is a technical engineer on a pole trying to fix Globalcom network or MTN network. And all of a sudden he slipped. Without this protection net, he's crashing down to the ground. That's the same thing that happens to you when you don't have a stop loss on your account. If you don't have a stop loss, if price is going against you, right in front of you, you will see all your money going down the drain. But the stop loss order helps you to do what? Cut any type of excessive loss in your account. Now, this is what I'm talking about. You're expecting this to go what? Up. You're expecting an uptrend to happen. And this is your stop loss. What happened? You bought this market here and it was going up. Instead of it to continue going up, it decided to turn down, to go back downwards. If you don't have a stop loss here and you have a $100 account, you use 0.10. That's $1 per pip. If this thing goes down 100 pips against you, 100 step against you, your $100 is gone. You understand what I mean? But if it goes $100 in your favor, your $100 is what? You have an extra $100. Now, let's say it's going against your favor and it goes 10 step against your favor. You put your stop loss here. You say, oh, out of my $100, I want to lose only $10. You set your stop loss here and you put a figure. As soon as price goes against you 10 step, that stop loss will what? Automatically close that trade. And what you're going to lose will be $10. Forex is the only business that you know how much you're going to lose. If you say out of my $1,000, I'm going to lose only $3, even the devil himself can't do anything about it. That is what you're going to lose as far as you have your stop loss. Why should you use stop loss? If a trade goes the wrong direction, your stop loss will stop the order after a certain price limit has been reached. Very important in risk management. If you don't have good risk management, please take your hands off what? Forex trading. Now, calculating stop losses for a buy up. You can see this trade what as activated is going up. This red line here is a stop loss. It activated the green line, which is the buy order, and it's going up. This is the first take profit, second take profit, third take profit. Now, this person is actually in profit. So for instance, what if this thing goes against him? As soon as price gets to this red button, if it's $10 or $20, this person is going to lose. That is exactly what he's going to lose. If in a buy, you expect the market to go up, so you place your stop loss below. Always inversely correlated. Always inversely correlated. If you are expecting price to go up and you're buying, your stop loss should be below your what? Your entry price. The same thing with your what? Sell order. If you're expecting price to go down, just like what you're seeing here, your stop loss should be above this. You can see this. So this is your entry price. It has been triggered and it's not going down in your favor. Let's say you don't have a take profit, or your take profit is somewhere around here, and this market comes down here and started going back up. If it goes back up and come to this place, you're going to lose. That's why it's always good to have your stop loss. Immediately you're in profit, you can as well take this price and move it down here. I'm going to teach you how that one works, how to secure your profit when you are already in profit. So this is how your sell goes. For a sell order, your stop loss is above your entry price. The green is the entry price. The red is what? The stop, just like a traffic light. The green says go, the red says what? Stop. You can see the calculate your stop loss is like calculating pips. You just calculate the distance from your entry price and your stop loss to find your SL and to buy, and on a buy subtract from your entry. To find your SL means stop loss. On a sell, you add your entry, just like what we showed you the previous time. Now you can see this profit targets, entry, stop loss. This is the stop loss here. This is the entry. This is the candle, the current candle here. This one I'm showing you here. As soon as this thing gets up here, this trader makes money. But if it doesn't go up, if he reverses and hits here, he will lose the amount that he actually risked for this particular trade. That's why it's good to always have his what? Stop loss. Now, type of Forex analysis, we did this yesterday. Technical analysis, fundamentals, and sentimental. Technical analysis focuses solely on charts and past price behavior. Now, in Forex trading, anything that happened in the past will always repeat itself what? In the present. So that's why when traders are saying, I'm expecting price to actually come back here, they've seen that price have gotten to that place before in the past. So there's a tendency that it's going to come down before it starts going to its direction. Traders will often incorporate indicators or tools. For those who use indicators, traders attempt to anticipate future price movements using past price behavior. So this is how it works when you are actually trading technical analysis. Technical analysis, you need to have an idea of your charts. You have to do your analysis using the charts. You have to do your analysis based on what happened before. You can see the price going up here. This is an old trend. Price is consolidating here, and this is a breakout. If you see where price got to this place, it actually came back to test where it happened here before it started going back up. Like I told you yesterday, if you are breathing in, there's a level you can hold your breath. Some people can hold their breath for 5 seconds, some people 10 seconds, some people 1 minute, and before you do what, you release it. For you to have what? For you to release and regain your breath. That's the same thing with the market. No matter how market keep going up, there's a time it's going to actually get a relief. That's what you see, this consolidation zone here before it continues its movement upwards. So the same thing that happens to you happens to the market as well. Now, fundamental is basically for news. That's why I told you, if you know you want to be a Forex trader, you need to be acquainted to what's happening worldwide. This is not a time that you'll be on your social media or your playing game and all that. You need to be acquainted to Bluebank TV. You need to be acquainted to your Forex factory. You need to know what Trump is actually doing. You need to know what the Prime Minister of UK, you need to know what so many other people, Boris is doing. What are they saying? What's happening? For this to help you, there's a site called the Forex Factory. If you go to that site, you can see the activities of every country, what's going to happen, what they are planning to do, the economic stuff and all that. That will help you understand how to trade fundamentals. Fundamental concentrate on financial drives, concentrate on the financial drivers of the economy itself. Traders will often follow news announcements and data release. Traders believe sentimental based on news and economic data drives the market, which is it. Donald Trump can just go out now and say one nasty thing. You will see the value of US dollars will go down. If he goes out now and tweets, I'm going to kill my opponent, you will see the value of dollars will crash. If you are trading Euro USD, what you should do is just place a buy. Because that thing, just that little tweet he's going to tweet, can change the whole market. So it's the same thing with other top people in the world when they talk, or when you know that you go to their GDP of their country, what happened, the employment stuff, and all those things that are happening in different countries. If you check all those things, it actually affects what happened in the forex market. Fundamental is basically news updates. I will show you. Okay, let me show you Forex Factory. Do I have Forex Factory here? Okay, I don't have Forex Factory. Let me show you Forex. This is Forex Factory. If you can see my Forex Factory, please type 2 on the chat box. Type 2 on the chat box. Okay, now, okay, today is Sunday. Good. This is what's happening. These are the people. Visitors arrive, bank lending, core machineries orders, economic for German WPA and all that. If you click on more, it will show you what's going to happen on Monday. The news that we're expecting on Monday, you can see. Now, anywhere you see a red envelope like this, always be careful to trade that pair. This is Australian dollars. The governor of Lower is going to talk. He's going to speak that day. That's on Wednesday. You need to be careful. By 11:45 Nigerian time, it should be 2:45. This calendar is 1 hour ahead of our time. So you need to be careful if you are trading any pair that has Australian dollars on it. Every red candle. Now let's see US on Friday. We have core retail sales and retail sales. This thing can actually affect the market, the fundamental part of the market when you're trading. So these are what you do for a trader. In the morning, before you pick up your trade, you say, I want to trade, go to Forex Factory and check what is actually happening. That can determine it can also help you when you're making decisions in the trading market. Now, sentimental analysis is based on emotion. Like I told you earlier, in the Forex market, there's a way you will see a downtrend. The market has been falling for so long, it has been falling for months or years, and you like, I'm sure this market is going to reverse today because it has been falling. It cannot fall like this and keep falling and falling. And you decide to just place a sell or you place a buy. That is based on your emotion. This is an overall feeling of the market. It's not as important to understand every detail of news, but more important to gauge how people are responding to the news and how to show up in the market. So these are all emotional stuff of different traders in the market. But the two major ones I look at is the technical and the fundamental. Now, we did this assignment yesterday. So now this is the intermediate class. This is today's class. I'm sure you understand the recap I did for Friday and Saturday. Please, if you understand the recap, can you type, which letter are you gonna type? Type 555 on the chat box. 555 on the chat box. If you understand what I just did, good. Okay, thank you. I love this class. They are very, very active and they're paying attention. I hope you're jotting down, you're documenting all this thing. Now, this class is today's class. We're going to talk about taking trades with your mobile phone, risk management, what is a trend, what is support and resistance, pullbacks and reversal. Yesterday, I told everyone to look up on their ceiling. The ceiling you are seeing in the forex market is called resistance. If you look down, the foundation of your house, your tiles and all that is called, in the forex market, is called the support. Why you are actually standing on the ground where you are or sitting down is because of the law of gravity. If there's no law of gravity, if you go to the moon now, you'll be floating. That is the same thing in the Forex market. There's a way price is going to be on, if price is on the support area, as a Forex trader, what you should expect to do is to buy. But if price is on the resistance level and it has not broken in, like I told you, if you have a sledgehammer and you keep hitting, maybe you have 5 days to break through your ceiling to get to your neighbor's house. Or don't worry, you're not in prison, but maybe you're watching Prison Break. You want to escape from the prison, and you are given a sledgehammer, and they told you that you have only 10 days to break through that ceiling and go out of there. That's the only escape route. So that time, the first day you're going to break it. You keep hitting it, and you could not succeed that first day. You know you're going to sleep. So by the time market gets to the resistance and it hits it, and you see that market cannot do what? Break through that resistance. It closes above it. For a trader, what you should do is what? Sell. That period that you're tired, that you're sleeping, traders are going to sell back to the support. Because the more you keep hitting, you're standing up and you're hitting your ceiling, price is hitting that place, trying to break through the resistance for you to go up. But because you can't break it through, that night you're going to sleep and you're like, oh, okay, let me rest and continue tomorrow. The process of you bringing down your hand and coming down to your bed, traders are going to sell that market from there down back to the support. That is day one. Now, let's say on the night there, you were able to break through the ceiling and you got to the second floor. That is what they said. Each time market breaks through a resistance zone, always wait for a retest. Then you do what? Continue buying, because that resistance now becomes a what? A support. So if you break through your ceiling and you get to the second floor, that second floor now is no more a resistance for you, is now a support. You can now sit on top of the ceiling and take your deep breath and think of the next thing you're going to do. Maybe to break through the other one for you to escape. So that process of you sitting down and relaxing, well done that you've gotten through, you've broken through the first barrier and you're sitting down, that is called a retest in the market. I'll use a live chart to show you what that means. So support and resistance is the only and the most sweetest thing in the market. If you understand how to spot it, your trading life will be very easy. Now, what is trend? Trend is what? Just there are two trends, going up, bullish trend, or what? A bearish trend. Remember what I told you about the bull? The bull, when they are fighting, they throw their what? Their opponent up. And the bear like to stample on their opponent. If you hear someone saying hawkish, the market is going hawkish. Hawk don't fly as high as what? As fly as is it hawkish and dove? Yeah, there are two ways. I'm going to remember that. So all those terminologies is for you to understand what the person is telling you to do. So if I'm saying I'm going bullish, that means I'm buying that market. If I'm going bearish, I'm selling that market. That's just what the trend is. And bull means long, buy. Bearish market means sell. Now, pullbacks and reversal, I'm going to explain to you what that is. Now, we've gotten to today's class. Intermediate class is for the third day, which is today. Remember, this is the last day for our free lesson today. So I want you to pay good attention. How to take trade with your mobile phone. Remember the orders we told you about? The buy limit order, the sell limit order, the buy stop, and the what? The sell stop. So if you go to your mobile phone now and you see USDJPY, you click on this drop button. This is what's going to drop. This is what is going to drop down. So it's either you pick instant execution to take the trade, you pick buy limit, you set your limit order, sell limit, buy stop, sell stop. These are all the orders. My chat is blinking. I'm sorry. Let me check what's happening. Give me 1 minute. I'm sorry. Okay, Forex Schofield. Okay, now this is how the screen, this is your mobile, how it looks on the mobile interface. Okay. Now let's go to the next one. Now look at an instant execution. When you have an instant execution, you don't see limit order. All what you need to place is your what? Stop loss and your take profit. And you click sell by market or buy by market. You see how it works. Your instant execution, you click sell by market and buy by market. Now I want you to pay attention to those places that have the boxes on. Now this 0.02 here, this is your lot size. You see how small this thing is? This thing can make you and can also mail you. If you mean, like, you remember the story I told you yesterday, 2 years ago, when I called a trade in a class, people were actually making $20, $2, and one woman that had $200 account, she made $200, and everybody was shocked because that was a news day that day, and I was anticipating that it was FOMC, so I was anticipating that the dollar is going to gain strength, and exactly what I predicted happened, and everybody did an instant execution, 20 pips. And what happened? The woman said she made $200, and we're shocked. I was like, madam, but you have $200 account. How come? What happened? We forgot that on this box here, she used a standard lot. One standard is what? $10 per pip. So 10 times 20 gives you 200. So what we needed that day was just 20 pips. And she made $200 on her $200 account. That was a blessing in disguise. That was would I say blessing? It wasn't a blessing because it was a curse in disguise. Because that thing now changed the mindset of that woman. She was thinking that, if I can make this in just this call, if I continue using this lot size, I will make more money. She forget that if it goes against you, the market just needs to go 20 steps backwards or 40 steps backwards. Since she has 400, if the market goes 40 steps backwards, all her account is gone. And like I told her that day, I said, madam, please change that lot size. Don't ever use that lot size again on that account. This was a mistake, yes. But she didn't listen. She came back the next day to the class, and that $400, everything went to the drain. What happened? She said she was just trying, the trade I called in the market, she was just trying to take it, but the drawdown couldn't take it because of the lot size. So you see this little figure you're seeing here, 0.02 means 20 cents per pip. So you need to be very careful. If you have a very small account, I always tell people, use 0.01. It's better you gradually grow your account than you want to go to the market and be greedy. The only people that lose in the Forex market are greedy people. So you can see that now where you have your stop loss, after you calculate it, you paste your stop loss here, your take profit, you put it here. If you are buying, you click on your buy by market. If you're selling, you click on sell by market, and it's automatic. This is not what you have to be looking every day. Two things will happen: either hit your profit or hit your what stop loss. Now look at the buy limit. This is a buy limit interface. You put your limit order price. Remember what I told you about buy limit? Price is below the current market price. If you can see, let me see if I can. Oh, sorry. Okay, now if you see this red line here, that is the current market price. The current market price is 114.056. So my buy limit is below 0.56. Remember, this is 0.00. So there are 6 peaks below. So I'm expecting price to go down to 0.0, somewhere around here, somewhere below, activate me and do what? Increase. You can see my take profit for buy. I'm expecting the value of dollars to increase. That's why I'm expecting to increase to 115.00. This screenshot was done some time ago. So you can see here 115.00. Now my stop loss is below the current price and also below my price here, 113.000. If I place my place order here, price will not activate until this thing here goes down to this level. As soon as it gets to 114.000, it activates me automatic. Two things will happen. Is either price will go straight up, hit my take profit and make money, go straight down, hit my stop loss and I lose money. That's how it is. It's not something that you have to read. It's automatic. You don't have to look at it every time. Now look at this trade here. These are all the trades that this person took when he took the screenshot. The USD JPY, Euro NZD, USD CHF. You can see the profit and losses here. The blue is the profit made. The red are the losses made on on this particular trade. The interface is not having a stop loss. Which interface are you using, Madam Ibukun? You must surely have a stop loss. The stop loss, there's no interface that don't have a stop loss. So when you go to these are the trades that are already closed. These trades they're not running trades, they're not active trades. These are trades that are already closed. So if you calculate the red and the blue, you will know how much you've made and how much you've actually lost on this particular trade. Now, what is risk management? Sorry, my chat is blinking. Just write down your question. I'm going to answer that, okay? What is the risk management in Forex trading? Forex trade risk is simple, the potential loss of profits which occurs as a result of a change in exchange rates. To minimize the likelihood of financial loss, each investor needs to have in place some forex risk management actions, strategies, and precautions. Like I advise, the percentage of a trade per trade that you're going to enter, your percentage for loss in any trade should not be more than 1 to 3%. So if I have $100 account and I want to enter 2 positions, I'm not expected to lose in my total $100 account 3% of that $100. If I want to lose those 2 trades, it should not be more than 3% of my equity of my $100. So 3% of $100 should be $3 if I'm not mistaken. I'm not good in math, except when money is involved. So in those 2 trades you are placing or 1 trade, you're not expected to lose that amount. So if you're calculating your risks, if you're doing your risks and you're entering trade, you need to be very, very careful and know how much you're willing to lose in your what? Trading. So if you're saying I have $100 account and you're losing $30, that's how many percent? 30%. That is a bad forex trader on just 1 trade. You're not supposed to lose that. Per trade or per equity, what you're supposed to lose in a day should not be more than 3% of your what? Your equity, of what you have, your capital. So you need to calculate all that before jumping into any trade. Before you take any trade, think of the losses before you think of what? The money. If this thing go against me, what's going to happen to my account? By the time you put that into consideration, it will help you know how to enter your trades and exit your trade. Now, after this class, I'm going to collate everybody's name. I will send you a trading journal. That journal will show you how much, whatever amount you have, if you put it there, is an Excel sheet, is automated. When you put it there, you know how much lot size you're going to use, number of stop loss you're going to use per trade, and all that. This will help you. It's better for you to have this trading psychology now than you going into the market to make money first and you lose your money and all that. The first thing you should understand when you're trading is your trading psychology. Make sure that I understand patience. I understand my risk management. I understand the skill before you do what? Gamble into forex trading. So for now, if you are trading live, stop it. Like I said yesterday, go back to your demo account. You need to have a strategy, a unique strategy that you've proven, you've used in your, you've used it, practice it on your demo account for like 3 to 6 months and see that you are consistent, you're making money. Then you have the boldness to go live in your trading. Like I told you, I'm not just doing this 3 days account and I'll leave you. No, we're going to be on this journey together. I need to understand that yes, you're interested, but only for those who are willing to learn. I don't want people that tell me I need trading signal, I need trading. I want you to be a master trader yourself, so you can pass this knowledge I'm giving you to somebody else. It's not just for you to depend on me. I want you tomorrow to be better than me. When you're posting on your Twitter, you say, this is how much I've made today. That will give me joy. Not after 3 days of training, you're telling me you're losing money in the forex market. I don't like that, okay? Now, these are your risk calculator. Every broker have a risk calculator on their platform, which can help you understand how much you're going to lose. The risk calculator, if you put your money to tell you the amount you're going to lose, the amount you're going to gain if you are trading based on what you want to do. Now, this is it. Look at this. 2% risk on each trade. Are you seeing it? If you have a $20,000 account, 2% trade, that if I lose this trade, I'm going to lose $400 out of my $20,000. If I gain this trade, I'm going to get what? 400. But if you are doing 10% risks, just imagine on a 10 trading days, if I lose this trade, if I'm losing on a 10 days like that continuous, this is what I'm going to still get. But somebody that is using 10% tricks, just look at what the person is going to do what at a balance of 10 days trading. But if you are winning all these things, calculate all these things and add it to your $20,000, you will understand how much you're going to gain. It's better you gradually grow your account consistently and you are profitable. There's a difference between a profitable trader and a gambler. When I started, I was gambling. Today, I make 100% of my account, my equity. Tomorrow, I make 30%. And the next day, I lose both the 100%, everything, I'll lose it back to the front and I'll add more equity. That's not trading, that's gambling. But trading is, January, I started with $100. I started with $500. December, my money has increased from $100 to $900. Now you can call yourself a forex trader. Not, I started with $100. May, my money is $900. By December, you are the one owing Antec. If you go to your MT4, you are showing minus 100. That means you are owing them. Any money you put inside there, they'll deduct it from it. I'm just joking, doesn't happen. But you'll be the one owing them because you don't have good trading psychology. So I want you to understand that to be profitable, if for you to have consistent profits, I'm not saying you're not going to make some losses in your trading. You will make losses, but your losses should not be more than what? The profits. That's what makes you a consistent forex trader. Now let's go to the trend. A trend is a tendency for price to move in a particular direction over a period of time. Success with forex market investment is tied to the investor's ability to identify trends and position themselves for profitable entry and exit points. The articles examines the stages of a forex trend and how they affect investors. Now look at this beautiful picture. This is an uptrend. The market is going up, up, up. Here is a side where there's no trend here. This consolidation. And now see the market is going what? Down. Now in forex trading, market don't just move like an expressway straight. No. Like I told you, you breathe in, you breathe out. Now look at this uptrend. Market what did what? It breathed in and it came here, it breathed out. A good forex trader have seen another position to buy. You bought here when the market started going up and the market came down, it breathed out, you bought it here. You placed another buy entry and you continue buying. The market breathed out again, you bought. The market breathed in again and you did what? You exit the trade here. Don't worry, you understand how this thing works by the time you start getting acquainted to what? Trading. If you look at this uptrend here, you can see low, high, higher low, higher high, and all that. For an experienced trader, all this time the market is breathing out is another opportunity for the trading to buy. But until you get that, very soon you're going to get to that place. Okay, it doesn't look like this on the chart. It's looking so beautiful here, but on the chart it doesn't look like this. So on the downtrend, you can see the same. Starting from a high point down to a low point, the market breathed out again. You entered another sell. It came down, went back up. You entered another sell. That's how the market goes. It goes in a zigzag form. The market goes in the market closes in a zigzag form. It doesn't go straight like that. So don't expect you enter a sell and the sell will just keep going down. No, no, no. There's a time that the market is going to breathe in, breathe out. All those times is time for you to do what? Enter. See my red arrow. This is a downtrend. And the blue arrow is a what? An uptrend. The red arrow too is a downtrend. The blue arrow what? Is an uptrend. So all these movements in the market, you can see here on the second blue arrow here, the market did what? Relaxed a bit. For an expert trader, this is the time for him or her to do what? Buy and buy to this extent again. By the time the market goes back down, another opportunity for the person to buy and keep doing what's going up. That is just what it is. The same thing with the sell. You can see the long sell here. The market did a reversal a bit, pull back here and continue going back down. The market reversed again here and went back down again. That's how it is. It's not just going up. You can see the zigzag and all that. The candle will help you understand how the market is moving. When you see my chart is blinking, let me check what's happening. Okay, Femi, thank you about that. Okay, thank you, Femi. So that's how the market moves. Now I want you to look at another picture. Now, what is support and resistance in forex trading? Like I explained this, I explained with layman's language how forex and how support and resistance works. Support occurs when falling prices stop, change direction, and begin to rise. Support is often viewed as a floor, which is a supporting or holding up prices. Resistance is a price level where rising prices stop, changing direction, and begin to fall. Just like I told you about you breaking through your ceiling and you couldn't do it that day, you decide to relax again. That period you're relaxing, price is screen was falling down back to a support area. So that's just the difference between buying and selling in the forex market. Now look at a beautiful illustration about it. The green is a buy, is a support. You know, remember I told you, you buy at the support level. You don't ever sell on a support level. Before you can sell on a support level, price must have broken through this. retested the support without coming back here, then you can do what? Continue selling back to another support. But if you sell here, expecting that price will do what? Come down and price start going up, you're going to lose. So you buy on the support and you sell on what? The resistance. Now this is support level. Price came to this place and bounced up. There's a resistance here. And what did it do? The resistance was so strong, it couldn't push price through, it couldn't break it through that day. Price came back down. What? It came back down. It will look for another support. If it doesn't come back to this support, it will look for another support and continue going until it breaks through. Now look at the other picture. Price started from here. There's a resistance here, first floor. Let's say you're going to the third floor. You got to this third floor, but you have to break through the floors. You cannot climb to the step. You have to break through the floor to get to the other one. And you tried the first day to break through, you couldn't. You tried and you couldn't, and you came back, you found a support level where you can rest. And the second day you did what? With all your strength and all the muscles that you've been gymming and all that, you've been carrying your gym, you're like, no, I'm going to escape from this prison. I'm going to break through. And that second day you broke through. Pow! You broke through the resistance and it went back to another one, the second floor. And you have to take a deep breath. Okay, yes, I'm actually getting better. I'm getting better. I'm seeing the sky. Very soon I'm going to escape. And that day you couldn't break through the second floor. You had to relax. That time you're relaxing, you're getting strength from another support. As a trader, you buy. You buy again till you break through and find another resistance. That's how you keep doing. This is how the market goes. It goes in a zigzag form. It doesn't go in a straight line. So every fall is a time for you to do what? Buy again. But you need price action to tell you when it's time for you to do what? Fall. When it's time for the market to do what? Stop falling for you to buy. I'm going to explain all that in another section. Now look at this live. This is a live screenshots from the market. Now see the green are the support areas. The red is the resistance. You see when price came here, it broke through this ceiling. Now remember, any ceiling, any resistance that price has broken through, that resistance becomes what? A support. Because if you break through your first floor, you are no more going to come down to the basement. You are going to sit on top of that first floor and be thinking of how you're going to break through the second floor. So now that resistance level that was your first floor is now becoming your support. So now price broke through this first place and now it now changed from red to green. But it came here is what? What happened to this place? Is the red one is the resistance. It pushed it back up. And as at that day, as at the screenshots here, price did not break through the resistance. You can see it came back here and price stopped it until the screenshot. This was the screenshot. I don't know what chart is this, what pair is that, but there's a tendency that it can either break through and go up or reverse it and come back down. Now see how this one was. Let's look at this resistance here. This one was a resistance. It couldn't break through. It came down here, tested this one, broke through this resistance again. This used to be a support. It broke through and it became a resistance. It came down here and you see what's happening. I'll teach you how to spot this thing in the market where you're doing a live chart. This is another live chart. You can see this. You see how the market is moving. This place here is consolidating. It's a support level. It broke through the red line, which is resistance, came to another new resistance. It couldn't break through that day. It found a support around here and continue. You see here, it came down until it broke through. This is how the market keep moving. Those red line are the resistance level and the blue line at the support level. You're not going to see this line I'm showing you on the live chart. All you're going to see is only a candlestick. But to spot all these things is very simple. It's hard for you now, but by the time you start getting acquainted, you keep studying, it will become simple for you to spot this thing. Now this is another example. This NZD USD. You can see now. I want you to know. Type the answer on the chat. What trend is this? Is this an uptrend or a downtrend? I want you to send the answer on the chat now. Let me know if you are following me. Uptrend or a downtrend? You are breaking my heart to look at it. Is this an uptrend or a downtrend? Good. Yes. Okay. Keep typing. Uptrend or a downtrend? Beautiful. If your answer is downtrend, you got the answer. If your answer is uptrend, you did what? You failed it. I'm sorry. Now let me explain. Those who said uptrend, I don't know what made you say uptrend. Now look at You can see if you're looking at it, the price is falling down, fall like a mango tree. You can see it falling down. It's falling down. Even when it came back to retest this resistance level, it continued falling. So you see what I did here? I spotted the support level and the resistance level. I'm expecting price to break out of this line I drew here, retest the line and fall, or close above this line I drew here, come here, break through, retest it, and keep buying. But for now, what you are seeing here is a downtrend. The trend is what? It's falling down. So if you know your answer was downtrend, congratulations, you're really paying attention. Don't worry. For those who said uptrend, you're going to get, you're learning, okay? You've learned something new today. Okay, so clap for yourself. For those who said downtrend, clap for yourself. You're getting it. You're already becoming traders. So these are the levels. You can see resistance level and support level. Those arrow key, when I drew this thing, I showed you two things. Price will break through the support level. Remember I told you on the floor, if you want to go to the basement, maybe on the first floor, you break through the first floor, get to the basement. The basement is now your new support. The first floor ceiling is now your new resistance. That's the same thing here. I was doing the arrow key that if price breaks through here, I'll wait for a retest, then I continue selling. Or this support level is so strong that I can't use, no matter how price hits it, it can't break it. It will continue, it will reverse and buy, retest this resistance level and continue buying. Then you can see there's an uptrend here. But for now, what you're seeing here is a downtrend. Price is what? Falling down like a mango tree. Now, difference between retracement / pullbacks and reversal. Retracements are temporary price reversal that take place within a large trend. Retracements in an uptrend are categorized by higher lows and higher highs. A reversal is, on the other hand, is when the trend changes direction. Now, let me go back to this chart so I can tell you what it is. You can see here that price fell all the way down here. Written out here is a reversal. Look at this. The trend generally is a downtrend, but it fell down here, and this point where it went back up here is just what? A reversal. And it continues what? Is downtrend. You understand what I mean? That breathing in and breathing out, those things that it's doing is just, reversal is just temporary. It's a temporary word, just a temporary, the price is going back up and coming, so they're going back up and coming down. It's for you to change direction. Now I told you that price don't just go one way like that. It needs to stop, pull back a bit, and continue doing what? Going back. Pull back a bit and continue going back. So those reversal on a trend. Let me show you. Let me go back to that trend and show you. Now you see this. You see this is a 4 hours chart. I'm going to explain 4 hours, 1 hour, and the rest of them. This is a 4 hours chart. Now, if this is a daily chart means one candle. Oh, let me show you a live chart. Hold on. Okay, beautiful. This is a live chart. Now, look at this. Let me show you this. Control G. Beautiful. 1, 2, 3. Let me increase it. Now, this is a daily chart. Look at this screen where my cursor is. Let me go to 1 minute. 1 minute chart, it takes 1 minute for this candle to form. 60 seconds make 1 minute, right? It takes 1 minute for this candle to form. If you go to a 5 minute chart, it takes 5 minutes for this candle to form. If you go to a 15 minute chart, it takes 15 minutes for each candle here to form. If you go to a D1, which is daily time frame, it takes 1 day for this candle to form. Now let me zoom in this chart a bit. Now each candle you are seeing here took 1 day for the candle to form. Now this pair is GBP NZD. This candle here was Friday candle. The one before it was Thursday candle. So now you see this. Let me use my trend line so you can understand. This is a downtrend here. Now this one going back up here is a reversal. You can say that this is a reversal. The trend is a downtrend. It did a reversal here, came back, and is now going backwards, up from what I'm seeing. Unless I look at my chart to understand how it goes. Now this is a downtrend. Then this one going back up here is a reversal. You know, remember I told you that this is a daily time frame. So if you come to 4 hours, one candle here took 4 hours for that candle to form. So now if you want to know how many 4 hours are in a daily candle, you just do your mathematics, okay? But let's do with this. Let's start with the daily candle. Now from here to here is a downtrend. So if you calculate the number of candles here, 1 up to here, it could be like, this is March 2020 up to July 2020. So to tell you how many days it took for this candle, for GBP NZD, the value of pounds to drop all the way from here down to this place. And it reversed here, again power again. And here it loses power. Now pounds is gaining more power. It looks like as if it's buying back up. So this reversal here, this line I drew here is what it called reversal. Now let me go to a smaller time frame and show you what a pullback is. Let me squeeze it. Now look at. I'll use my trend line. This is an uptrend. It's going up. It came down. Went back up again. Came back down. Went back up. You can see it's just temporary, but it's still going back up. Came back down. Now I'm sure you people can see support level, resistance level. Boom. You see that level is a resistance level for this price. Price came here. It did a pullback here for it to continue. It broke through this resistance level. I'm going to use a blue line. This is the support here. Let me make it a blue line so people can understand what I mean. 1 minute. 1 minute. Okay. Beautiful. I'll just do these 2 lines so I can continue. You see here, price broke through from this support up to this place, met a resistance level, came down, did a pullback, broke through the resistance level, came back through the support level, broke through the resistance level, came back here to form another support here, and it's going to break. There's most likely that it might either break through here, this level, or it will come back to the support. You see how the thing works? Just like that. That's how price works. You look for levels where the thing have breaking up and down. So this pullback here is this relaxation here is what? A pullback. Pullback, continuation, pullback, continuation. That's what a pullback and reversal. Reversal is on a higher time frame. What you see on a higher time frame that there's a large movement. It shows that, like this one now. Let me give an example. This is a downtrend. This pullback you're seeing here to a smaller time frame is a long trend. Do you understand? So a reversal is telling me that price has changed direction. It's time for it to do what? Start going to another direction. So here, price has changed its direction from falling down, is now going what? Up. That's different between a reversal and a pullback. A pullback is just temporary. A reversal is that the price has changed from the downtrend to the uptrend, or the price has changed from the uptrend to the downtrend. That's just what a reversal actually means. Okay, so let's go back to now look at how to identify pullback and reversal. Now see, overall trend here is what? An uptrend. This purple are retracements, they're pullbacks. These are just temporary pullbacks for you to do what? Another position, enter, go back up. But by the time you see something like this, boom, the trend has changed back to what? A downtrend. I'm sure you can understand it from this. This is no more a retracement. It's now what? A downtrend. Say the same thing here. You can see here, this is an uptrend. It came here, consolidated, and broke through. This is no more a pullback. This is now a reversal. The trend has changed from uptrend to what? Downtrend. So the difference between pullbacks and reversal, pullbacks are temporary fall short for you to continue on that same trend. If it's an uptrend, It's just a pullback. Is for you to, like I told you, breathe in and breathe out. You are going back for you to pick another entry to continue your journey up. But when you hear of a reversal, it means that the trend has changed from uptrend to the other trend. That's the difference between a pullback and a reversal. I hope you're understanding me. My chat is blinking. Interesting. Okay. Yeah, you can call retracement. Yes, retracement. You can call it retracement. You can call it pullbacks. Yes, they're just different. It's just different stuff. Yeah, you can use any language you want to use it. Now, this is another one. Have you seen it? Those red lines are for you to do what? Take more sell and more short to enter sell. This is a downtrend they are saying here. I did this screenshot. This is GBP card. Price is falling down from here. This is a downtrend. But by the time it got to this place, instead of it to just continue, you can see it broke this last one here. For it to break this one, this height here is higher than this. So it's an indication that, oh, this price has changed direction. It's not more going to fall again. It's now rising back up to this place. So all these ones going back here are pullbacks, temporary pullbacks. But this one here is a reversal. You can see it started creating what? More chances for you to buy the market going back up. So this is another difference for you to understand between reversal and pullback in the market. Now this is assignment 3. We've come to the end of tonight's session. I hope I did not give you too much information in your head. So I want you to take your screenshots. You know what we did the last 2 days. You're going to do the same thing now. We have 6 assignments here, because if you do this assignment, it will make me understand that you actually know what you are doing. What I'm actually teaching you, you know what I told you earlier, is not the food that you eat that's important, but it's the nutrients that you take in that food. It's not what I'm saying now, but what you understand and what you put into practice. So please take a screenshot. You can write it down and submit your assignment to me like you did the other time on Twitter, on WhatsApp. If you got it from Facebook, you can do that, like I said. And I promise you that we have somebody on the call that's going to give you a word of advice or encouragement. You know, this person is a very busy person, but yet it takes his time to understand what it is to trade in the forex market. And now he's doing very, very well trading and understand what it is. He's also a brand ambassador for one of the big broker here in Nigeria. I'm going to mute him. He's going to tell you a little word of encouragement. So don't take this lesson for granted. Go back, do your research. If you have any question you don't understand, you can always get back to me. I will help you through. Like, I'm going to create a WhatsApp group for everybody that did the assignments. Like I said earlier, I'm going to create a WhatsApp group for everybody that did the assignment. So, sir,
Can you hear me?
okay. Then Jazzy, you can take it from here.
Have you opened my microphone?
Yes, we can hear you, sir.
Since you padlock my microphone.
Yeah, we can hear you.
Okay. Hello
No,
everybody.
we're hearing you.
No problem. Hello everybody. I'm really excited and happy to see that you guys are here and taking this seriously. I just want to let people know that at first, in the beginning, it might seem like almost everything that she's saying is gibberish. But then after a while, when you start getting into the trading properly, you will now start understanding, and it will now become like second nature to you. I only started trading during the lockdown. Somebody reached out to me on Instagram that, since that a lot of people are home this period, that why don't they like pick up like new skills and stuff like that? I should help him do advert, like an ad on my page. So I was skeptical at first. I don't know anything about Forex market or anything. So I was like, this guy that wants me to come and tell people to come and join his school, and they'll pay money to come and join the school. How are they going to, like, what if this guy just scam people and just carry their money and run away? And after the guy, I say, I don't know about telling people to come and pay money to come anywhere. But if you are really a teacher. Let me pay. I will pay and come to your school. Let me come and learn what is this thing that you say you want to teach people. Let me come and learn and see. So the guy now actually started teaching me how to trade. He did the training for me for like a week or so. So he trained me for like a week. Then I started dabbling into trading small, small. Obviously, I started. I bought some accounts. Because I didn't understand like the psychology behind trading properly. Like she's trying to explain to you guys now. So if you just basically just take your time and almost everything that you've learned from the beginning that she's trying to tell you about risk management and stuff, take it as serious, as important as possible. The trading itself, at the end of the day, you find out that it's not difficult. It's going to be like 10% of everything that you're going to. It's going to be like 10% of the whole your whole trading journey. Everything that you're learning, all this support and resistance, all this pullback, all this thing. 10%, period, that's what it is. The main problem is your mind, is the psychology behind. The main problem is your mind, the psychology behind trading, not being greedy, looking at the markets, and see it as a place that you can come and gamble, come and put if you put $10 now, I can turn this $10 to 1 million. All right, it's not like that too. So you're just going to just take your time. You will make money in the forex market, but make sure that you follow everything that she told you about. Making sure you put your stop loss, making sure you trade with the right what they call it, risk to reward ratio and stuff like that, and you will become a successful trader. I'm really happy that you guys are taking this journey to enrich yourselves or better your life. And one day, Sha, it go pure for us. The hustle will pay last. As much as trading is like it's not my main source of income, but I actually it can be, it can be another source of income that nobody has any control over it. You can sit down in your house and just make any amount of money you want to make from the forex market, and it's so far it has become fun for me. I'm almost addicted now. I swear. The way I love music, I think I'm beginning to love forex like that as well. And in time, you guys are going to get there. If you don't start using proper risk management and maintain yourself and don't be greedy. If you don't do this, hey, you're going to lose small money. So just try as much as possible to control yourself, because you'll be seeing that, oh, it's easy to make. You will be thinking that sometimes the market, I think the market used to know when somebody is new. The market will just test you and just make you just win small. You just win small. Then you will not think that because of that, let me just increase my lot size. Let me do this one. Then at that point, that's when your money will not lose. You will not be fighting the market. I don't know why you're fighting the market. It's not the market, it's you. It's your own, your mind, your psychology that helps you. I'll try and see if I can join you guys as well in your tomorrow session. Please do your assignments as the Queen of Pips, as told you guys. Wait, no, she's really great at what she does. I was really surprised that she said that she was going to teach people for free, because she's actually very dope at what she does. There are a lot that I've learned from her. Even as I trade on a normal day now, so if I have any problems, I can just message her and say, Alpha, what do you think? And she has been an amazing friend. So you guys are very lucky to have her as a teacher from the beginning of your trading journey. So thank you very much for joining us. I'll see you again tomorrow. Okay? One.
Thank you very much.
Thank you.
I really appreciate it. So please, can you appreciate the Jazzy and type 555 to Tom? Congratulate him and thank him for coming up here to actually encourage everybody here. So please type 555 to tell him thank you. Beautiful. Awesome. Yes. Thank you. We really, really appreciate that. So we're going to end this call tonight here. If you've not screenshot your assignments, please do. Screenshot your assignment, do your assignment. For those who have my number, are those who actually did the assignment. Okay, I'm creating a group where everybody is going to be here and we'll start our journey in the forex market. I want you, like I said, to have an economy, your own economy in this Nigerian economy. Any amount of money you want to make in the forex market is there for you. $6.6 trillion is no small money. We are 50 something on this call. If everybody decides to take $1 million every month from the forex market, the market won't even know that somebody came in there. So I would advise you, instead of cutting your tree with a blunt knife or a blunt cutlass, take your time to sharpen your knife. So to give you, you will just have only 5 minutes or 1 hour to cut down the tree. What I mean is take your time to study this skill. Do all the mistakes you want to do on your demonstration account. Be the best you can be. So by the time you go live, you can proudly say, I'm a Forex trader. Do not get greedy. Money no they finish. Money goes to those who know how to multiply it. If money comes to you and they say that you know how to blow it, it won't come close to you. So please, thank you very much. I really